What up, world? Today we're diving into something that affects nearly every American, the affordability crisis. And here's what's concerning. Instead of addressing the root cause of why everything is so damn expensive, we're getting proposals to just stretch out how long we pay for things. From a 50-year mortgage to a 15-year car loan rumor that's floating around online. We're getting to a point where the problem of I can't afford this has become, why don't we just make the payments smaller and extend them forever? Does this really solve the problem or just trap us in debt for longer? Let's break down what's happening, look at the numbers, and talk about something that could actually help. This is Journey to the Bag. First, let's talk about the big one that's actually real. Pause. The 50-year mortgage. President Trump floated the idea, and the Federal Housing Finance Agency Director Bill Poot called it a complete game changer for homeowners. The concept is simple. Instead of paying your house off in 30 years, you now have 50 years to do it. Theoretically, that should lower your payment and make housing more affordable and more accessible for everybody. But let's look at the numbers. Using the September 2024 median home price of $415,200 with a 10% down payment and a 6.17% interest rate, a 30-year mortgage would cost you $2,288 per month. A 50-year mortgage would cost you $2,022 per month. That's a saving of $266 per month. That's pretty good, right? Here's the catch. Over the lifetime of that loan, you would end up paying over $389,000 more for the house than you would on a 30-year loan. That's not a typo. Almost $400,000 more would go towards that loan than if you would have signed up for a lesser term. And here's something even more concerning. It would take you 30 years just to build up $100,000 of equity in that property versus 12 to 13 years on a 30-year mortgage, simply because you're not paying the loan down. The first decade, you're just paying interest to the bank. It's similar to renting, except now you got maintenance and more property taxes to deal with. You might as well just give it to a landlord. And I'm not just saying that because I'm a landlord, but come on, you got better things to do with your money. The average age for a first-time home buyer is at 40 years old now. It used to be 28 in 1991. Imagine a 40-year-old taking out a 50-year mortgage. They're going to die and pass that mortgage on to their child. That's crazy. Under the Dodd-Frank Act, any loan lasting longer than 30 years doesn't qualify for federal backing. So Fannie Mae, Freddie Mac can't back a loan that's longer than 30 years. That would require Congress to make a change to the federal law guideline. And we just got done with a 43-day shutdown. So that'll give you an idea of how good they are at coming up with quick decisions. Even Trump kind of backed down a little bit. He said, it'll help a little bit. Now let's address the rumor of the 15-year car loan. Good news, this is false. So far, there's no credibility to this. Somebody made some official looking thing that looked like it was coming from the White House, but nah, it's not real. That said, we don't need 15-year car loans. We're already stretching these loans out into problematic lengths. The average length for a car loan is 6 years. That's 72 months. The average payment is $749. Some banks are offering 7-year loans. That's 84 months. And some are offering 8-year loans. That's 96 months for a car that depreciates half its value within the first few years. That's insane. The biggest problem with a car loan is the average lifespan of a vehicle is 12.5 years. So if you got a loan that stretches out 8 years, 15 years, you could be owing on a vehicle that doesn't even run. It's broken down or requires heavy maintenance. The probability of you being underwater on that loan is extremely high. You're pretty much guaranteeing that you're going to be owing more than what the car is worth. The average price of a vehicle right now is $49,000. And over a 6-year term, you're paying almost $10,000 in interest. You're paying a small fortune for something that's not even worth half of what you're paying for. Let's zoom out and look at this full picture. We have a debt crisis. All right. The total U.S. household debt as of Q3 2025 is 18.585 trillion. That's an all-time record. Mortgage debt is at 13 trillion. Auto loans is at 1.66 trillion. Credit card debt is at 1.23 trillion. Also an all-time record. Student loans, 1.65 trillion. The average American household now carries over $105,000 in total debt. That's up 13% from 2020. Credit cards are where we're seeing the most alarming trends. We got $1.23 trillion in overall credit card debt. The average household credit card debt is at $10,815. The average interest rate of these credit cards are 23.37%. 7% of these accounts are transitioning into delinquency, and 46% of credit card holders are carrying a balance month to month. And the credit card companies love it, because if you had a balance of over $10,800, it would take you almost 22 years to pay that off if you was just paying the minimum balance. That's almost $18,000 in interest you'll be paying to the credit card company. And that's assuming that you don't even add another dollar to your outstanding balance. I got credit card debt, and I'm working every day to knock this shit out because we just giving money away for nothing. Now here's where things get really wild. Buy now, pay later. We are financing everything. Concerts, shoes, groceries, clothes, you name it. If you can put a payment on it, we doing it. It's like layaway, except you just get your stuff right now and then, you just worry about it, next week. The worst part about buy now, pay later is late fees. You can get hit with $15 or up to 25% of the purchase. The interest rates are up to 36% for these type of loans. And a lot of people pay late. And what's crazier is they don't even report to the credit bureaus, so you could be racking up debt and not even really notice it. A real world example, at Coachella this year, the general admission ticket was $5.99, but ended up being closer to $1,000 with all the fees. The buy now, pay later option lets you put $49.99 down. They charge you a $41 fee, but they generated nearly $4 million in buy now, pay later related fees. This is just a perfect storm of everything just being too high. Housing. The median U.S. household spends more than 39% of its income on housing. The income required for an average house is $121,000, and the average person makes $25,000 less. So wages have not kept up with the prices of everything around us. Interest rates also have a part to play. Borrowing is more expensive. With interest rates at 6 and 7% for a house, it just costs more to purchase a home. You had people that got a 2%, 3% back in 2020 during the pandemic times, and they don't even want to sell their house because if they have to buy a new house, they're going to spend twice as much just to get the same house. But we can blame this on a lot of things. We can blame this on prices, interest rates. We can blame this on social media and just the keeping up with the Joneses, the financial gaps. We see people making $1 trillion over here, Elon. And then you see people over here that can't even afford to eat. And this is all in the same country. We gotta do better. How do we solve this? Instead of kicking the can down the road, let's try to find a solution. Let's try to increase the housing supply. Streamline the permit process, reduce some of the red tape when it comes to building. Try to incentivize builders to build starter homes or affordable housing instead of these huge mega mansions that only Elon can afford. Let's address construction costs. Everything is too high, it's too expensive to build things. And immigration policies has kind of driven that up. Tariffs has also driven that up. Let's try to reduce costs to make things more affordable so that we can actually build more. We got to work on wage growth. These companies are not paying a fair wage. Somebody has to get involved to see if we can get more money. People out here getting 2, 3, 4 jobs, hustling, getting it on social media, YouTube, selling themselves. We need more money. Got to figure out interest rates. Trump has been trying to bully the Fed into lowering the interest rates, but you got to do that responsibly. If you can refinance into a lower rate loan, that'll help. And there has been rumors of a portable mortgage being able to take your current low rate and transfer it into a new loan. But that probably won't happen. We have to get better with financial education. That's why I'm here. We got to work on being smarter with our money, learning about debt and how to manage it properly, learn how to invest. That way we can use whatever little money we got and try to make more of it. It is what it is. It's invest or die. You won't even be able to afford to eat if you don't know how to utilize your money right. Avoid the trap. Please don't do buy now, pay later. It's a setup. It's a game. They're against you. Credit cards are the same. You have to be super strict, super diligent with all of your money and track every dollar to the penny. Rest in peace, penny. Yeah, they stopped making a penny, but you know what I'm saying. Don't go for it. Look, I get it. When you're staring at a $400,000 house or a $1,000 ticket just to see your favorite artist, and somebody offers you a cheaper way, a more affordable way to do it, it's really tempting, but you can't go for it. Here's the hard truth. The affordability crisis is not solved by kicking the can down the road. We're just delaying the pain and making everything more expensive. A 50-year mortgage isn't making housing more affordable. It's just hiding the true cost that you're paying to the bank. We need to be honest here. We're treating the symptoms instead of curing the disease. The disease is that costs have skyrocketed, but wages haven't. We've created a system where people feel that they have no choice but to go into a tremendous amount of debt just to afford basic needs. And until we address the root causes of this broken system, housing supply, wage growth, and the cost of living, we're just putting Band-Aid on a gunshot wound. What do you think? Do you think extending these loans is a good temporary fix, or has buy now, pay later actually helped you manage your finances? Drop a comment. As always, the world is yours. Like the video, share the video, and I'll catch you on the next one. Peace.